This is the briefing for Friday, October 20th. Our job as traders and investors is to take information the market gives us and then determine the probability of one event occurring over another. In other words, is the market going up or is it going down? Is the stock going up or is it going down? And we try to do that in all degrees of time. In other words, we can look at a market in terms of a longer term time frame and see that it is in a definite trend in one direction or the other. And then we can zero down into a shorter term time frame and look at a pause or a counter trend rotation in that, and it looks like that trend has changed, and it could be something opposite to what we were looking at in the longer term time frame. So we have to determine whether a market is running and pausing or whether we're in a pause in various degrees of time. Over the past month, I would say, I've been looking at and analyzing the financial markets, the indices, in terms of basically three possibilities. And I'm not going to go through those three possibilities right now because I've done that for many weeks for now. But one of those possibilities was the fact that this is appearing to be the potential for a very bearish price pattern. And I've discussed this even in last night's briefing. Now, if that's the case, then we could be in for a sustained move to the downside, keeping in mind that markets run and pause in all degrees of time. And you can see that even through here, we have a run, pause, run, pause, run, pause, run, pause, run. And then, of course, is this a pause or is this the change of a trend? This potential bearish price pattern suggests that it could be a change in trend, although it has not been confirmed, at least not at this point in time. The other possibilities have basically been eliminated. One was that this was a counter trend. This was a counter trend move where it was a rotational pattern, and that was negated when we broke through here. We came back, retested the breakout point, and then of course now over the last few days we have accelerated to the downside. The possibility that this was a leg one, leg two, and leg three was certainly there, but we exceeded the equality between legs one and three. And as this move has started, you can see that the internals have been increasing to support this move to the downside, even in market breadth. In today's trading, 52-week highs minus 52-week lows, down to 925 more lows than highs. The internals are deteriorating pretty dramatically. Now, yesterday we reached a point of being oversold, and that suggested potentially extremely oversold. That suggested some type of a pause to work off some of that oversold condition. And pretty much that's what we got in today's trading, but a little bit differently. This is the spiders on a 15-minute basis and the Qs on a 15-minute basis. Now, you can see for pretty much of the day, we did start down lower at the beginning of the day, but then we spent most of the day in rotation or in a pause until the end of the day when we got a breakout of today's low. We broke through the opening low at 422 and, of course, closed at 421.21. Same thing occurred in the Qs where they tested the opening low from today. You can see also on a 15-minute chart that breadth was improving going into today, and then of course started to decline once we went into this move again. Same thing with the Qs. You can see over the last 2 days of trading, breadth was improving. We had a little bit of divergence, suggested once we reached that oversold condition that we would see potentially some type of a pause that would help work off some of that oversold condition. So now basically where we are is that we are testing an extremely important low in the spiders. That is the 418 up to 420 area. Now we closed at the low of the day. That suggests there could be follow through on Monday. In other words, the market would have kept going lower if it had not closed for the weekend. So I would be very, very observant as to what happens. Now, if this is a bearish price pattern, as I've suggested, we really don't know until after they have developed fully. That's like in a head and shoulders top or bottom. We really don't know if it's a head and shoulders top or bottom until you break the neckline and you see some acceleration in the opposite direction of the head and shoulders. So basically, if this is the case, then we should begin to see some impulsiveness to the downside. Now, just looking at this daily chart, the last 2 days appear to be fairly impulsive. Actually, the last 3 days appear to be fairly impulsive. But an impulsive move would include a gap, like right here. This was a pretty impulsive move on this gap from the close on this day down to that day. If we see a gap next week, whether it's Monday or Tuesday or whatever day, then that would suggest that the probabilities are increasing that this bearish price pattern is really coming up to becoming a much, much higher probability. And breaking through 418, closing below 418, will assist in increasing those probabilities as well. Looking at the NASDAQ or the Qs, it is still in an area of rotation. Now, granted, it's a declining area of rotation, but it has now closed below 354, 355, which was the lower extreme from this. But it's going to be important to see about the 351 area traded through in the Qs that would break this low and then suggest vertical development to the downside for the Qs as well. I neglected to suggest it, but you can see also that volume is increasing to the downside. Breadth is decreasing to the downside. 52-week highs minus 52-week lows is expanding. Same thing with the NASDAQ. NASDAQ breadth is declining pretty dramatically as volume in the Qs is expanding on the moves to the downside. And then we have the Russell that did have a head and shoulders top. As you can see, broke the neckline at 180. And the projection, assuming that you get the distance from the head to the neckline and subtract that, is down to 165. So the Qs closed at 166.44. So that is really within the range of equating the distance between the head and the neckline. So basically, once that level if it's broken, if 165 is broken in the IWM, then that is certainly going to suggest an increase in probabilities for the bearish price pattern that I've been talking about. And then the potential for looking at some pretty substantial downside is certainly there. And I really think that we're in for some potential impulsive moves, meaning gaps and go, where you gap and then the market just continues to go. Next level of support is about the 162 area in the Russell. In the IWM, you can see volume is just really increasing nicely. You can see the little bit of divergence we saw in today in the Russell. And that brings us then to the overbought and oversold conditions. So we are oversold in the NYSE and in the NASDAQ. Not extremely so, not like we were here or here. But that does give us an indication that potentially we may see a continuation of a pause or some type of rotation back to the upside based on the oversold condition. It does not preclude the market from gapping down on Monday and continuing to move lower. But I'm a little cautious right now, mainly because we've seen the short-term divergences in breadth that you can see right through here that really are not appearing on the longer-term charts. So we could see some type of a pause on Monday, but I'm leaning more towards now the probability of this being the bearish price pattern, and that potentially we're going to see some acceleration to the downside as well, mainly to give an opportunity to market to work off some of this oversold condition. Now, if this is a bearish price pattern, it doesn't matter how oversold we are at this point in time. The market is just going to absolutely continue thrusting lower, potentially day after day, keeping in mind that we do have runs and pauses in all degrees of time. Looking at total volume, you can see that the total volume increased in the NYSE pretty dramatically today. But today was equity option expiration day. And we usually get a spike on option expiration days, so I'm a little hesitant to give as much credence to the volume spike that we see in the NYSE, and you can see in the Nasdaq volume was down in today, suggesting that it was not an impulsive day, and that potentially this was the day that I discussed in last night's briefing that would help work off some of the extreme oversold condition that we had as of the close of yesterday. Looking at where we are in terms of the weekly chart now, I want to go to the longer term aspect of this. This is the spiders on a weekly basis, and you can see that we've got this move down, and we're right. This is the 418 area. That is really important support, as you can see, because trading and closing through that is going to open up trading through this area of rotation, which brings us down to about the 375 area. And then, of course, below that, we're looking at the October lows right around the 350 area. And that would be very interesting to see what happens from there. Now, I want to switch this to the Russell real quick. You can see the Russell has been in an area of rotation for quite some time. It really has not gone anywhere. We could track this all the way back to April of 2022. So you can see that the Russell really has not gained any ground at all. Now we're testing the lower extreme, which comes in at this 162 area. That's going to be very, very important. If the Russell breaks 162, I think it's going to be a pretty clear signal the other indices are in the process of following. Once again, looking at where we are in the percentage of stocks above their 50 and 200-day moving average, you can see the deterioration is becoming even more exacerbated. You can see only in the S&P 500, only about 15% of the stocks are trading above their 50-day moving average, and only 30% trading above their 200-day moving average. In the Nasdaq, you can see about 19% trading above their 50-day moving average, and only 24% trading above their 200-day moving average. And in the Russell, it's even worse, 15% above the 50-day moving average and 22% above the 200-day moving average. So basically, Monday I'm going to be a little cautious to the downside, mainly because I want to, unless we get a gap. If we get a gap Monday morning, and as long as there's not a divergence in breadth with the gap, I'm going to be leaning pretty heavily to the downside. If we do get some type of a pause that will work off some of this oversold condition, then it suggests to me that that the potential for a setup for a bigger move to the downside is certainly in the offing. Now, all this can change. Certainly, there could be a news event that could change the perception of value on the part of traders and investors. But unless or until that happens, the probabilities of this market moving lower are certainly higher than it is in them moving higher, keeping in mind that we get runs and pauses in all degrees of time. So basically, unless we see a gap that would gap through this 418 area and hold below it, I would expect the potential for some type of pause is certainly there. But if we do get a gap and it goes, we could see a move down to this 404 area pretty dramatically in the spiders. It's going to be really important week next week, and I should mention one more thing. This indicator that I use for overbought and oversold is pretty reliable, as most of you who have listened to these briefings know. When the indicators converge like this, it suggests a tightening in the market. And when that happens, it suggests then that there's a high probability of a breakaway move or a bigger move that is coming. Now, typically, if it were at an extreme oversold condition, that would suggest that the break's potentially going to come to the upside. In this case, I'm really kind of leaning towards the fact that the break could come to the downside, mainly because we've seen this extreme oversold condition worked off this day, then back down to oversold, then back up again, and then converging together. So it suggests to me that there is a tightening, and this market just needs it just needs to puke everything up, and then potentially we'd have some type of greater degree time and price counter rotation up, or another rotation back to the upside. So next week's going to be very important. I'll certainly be updating the briefings during the week, and certainly be aware of the fact that that the probabilities are such that we could see some dramatic move to the downside. But when that comes, then only the market knows that. Only the market can tell us that. We just need to position and then take advantage of it when it comes, and read the internals so that we know what price development is doing along with the price structure, so that that we can tell whether a counter trend rotation is in the offing or not. Have a great weekend, and I'll see you again on Monday.